Good morning, traders, and this is your Aussie, the South African top 40-day trading review for today. So yesterday, as expected, we didn't break higher. Again, we've got some incorrect data here, so we need to ignore this tail to the downside and just focus on what's happening between these two red lines. So bottom red line is the open, top red line is the close. Okay, we did spike up a bit, and we did spike down a little bit to close this gap. So anyway, what we've got is an inside bar, but it is a green inside bar, so I'm not going to pay much attention to that. It's to me, it's more a consolidation pattern that's starting to form, and you'll see that on the lower time frames, off a level. Okay, so let's just get started with that now. Back to the middle. So you can see what happened day before yesterday. We had the story of three. Okay, we gapped down, we closed this gap, and we've come back and we've now tested the break. So I'm just going to use these levels here. There's the break. Okay, that was where we are. We came down and we're testing this level. So that's my inside tail or my breakout. And what we have at the moment is inside bar, inside bar, inside bar. Okay, so that's three inside bars. Normally, a situation like this, you would expect a move one way or another. Okay, so because we're at the top of the move, I'm almost inclined to believe that we've still got another push down coming. What we do have is we've got this gap closed, but we do have another gap to the downside. And what I'll do is use this one here. You can see that inside tail wasn't quite tagged. Okay, and if I look to the left, although I'm not so confident with these tails, I think that was crap data as well. But if I look a little bit further, you can see there is a bit of interaction around here. Okay, so you can see the closing range strategy played out, although it played out right at the open. So it gapped onto there, came back. We had another opportunity for a short share, but it wasn't really full with much conviction. What we do have now is that. So this was our downward trend line. I'm not going to say it's a wedge, anything like that, because I don't think that's the situation. I think the situation is something like that. We've got a triangle which is in consolidation, and we'll have a look at this on the Bollinger Bands now as well. But you should see a Bollinger Squeeze happening. This could be seen as a fake out of this triangle break, and now we're expecting a move to the downside. So if I just quickly shoot across to what's happening with Tencent, Tencent's down 1.3% at the moment. China was down. Hang Seng was down quite substantially when I first looked at it, but it's recovered quite nicely now. So it was down almost 2%. It's now only down 0.2%. US markets yesterday were down, but flattish. So the Dow was down 0.17, S&P was down 0.2, and the Nasdaq was down 0.5%. So I don't think there's anything there. Rand dollar 14.89, so that's slightly weaker, which would bode well for a continuation of the upside. So this could be a fake out of the triangle, or it could be breakout and retest. So for me, the scenario is quite simple. Until we get a half decent pullback, and I would be looking at it on the 3 hour, I want to see a little bit of a deep pullback for an opportunity to get long. I'm going to be very cautious. So being cautious means getting onto the half hour, and you can see this triangle on the half hour is a lot clearer. Okay, so the closing range strategy is pretty much those two levels there. And let's just get our range targets in. Range target to the downside would test these lows again, okay, and range target to the upside would test the highs. Okay, what does that tell you? There's a good potential that this is going to turn out into a range. Okay, so if this breakout to the upside is anything to be believed, you'd be looking for a long on the break of this level, and then you're only expecting us to get to the top, basically this double top that we've had 2 days ago. Challenge for me right now is that is it's only 190 points. Okay, so there is data coming out this afternoon, so it would be interesting to see what happens when the data comes out. If the US market is anything to gauge, I think we should just expect consolidation and then a breakthrough. The US is at some major levels at the moment, so I'm expecting more of a break to the upside than to the downside. But again, I'm looking for deeper pullbacks. Okay, so levels for me today are pretty much on the closing range break of 52558. Then I'm expecting 52373 as my target, and that would also be an entry for a long with a relatively tight stop loss. Just bear in mind we do have a gap to the downside, so if we do get through the range target, I would almost expect us to come down and close this gap, and that is still to me a very good area for a long entry. Okay, so a break of 52739 to the upside would give us a target of 52920. Okay, so that's what I'm looking at the moment. Let's just go across to the Bollinger Bands, and I set an hour, and you can see what I mean by a squeeze happening. Okay, you can see when the Bollinger Bands start coming closer together, you can see we're just drifting sideways, and as we drift sideways, the squeeze is coming. Okay, not so much on the higher time frames. For example, the daily, we've basically got a break to the upside, and they're opening up. So this is still a bullish pattern from a Bollinger perspective, but if you look at it on the lower time frames, it's a squeeze, anything can happen. The big question is whether we're going to get a break. Okay, and which way that break is. I'm kind of 50-50, so I think closing range strategy would be what I'm playing for and looking to take profit, top and bottom of the range. Okay, so let's get back here and let's put those levels in. If we do get a break above either one of these, that would indicate the longer term trade for us. Okay, and obviously to the downside it is 52331, and to the upside it is 52941. Okay, anyway guys, that's it for me today. Hope that helps, and I'll catch you later. Cheers for now.